Good afternoon, traders. This is Christian from Tribeca Trade Group, and this is your end of day for Friday, March 15th, as well as the end of week market recap. So we'll go over all this week's moves. We'll go over what the level of difficulty I thought this week was, and we'll kind of have some thoughts to kind of look ahead for this week too. We'll go through as many charts as possible in a short amount of time. Risk disclaimer in front of you: everything that we're going through is for information purposes only, not giving any advice or recommendations. Everything that we're going through is for information purposes only. So in yesterday's video, I made mention that I was going to be kind of changing the format a little bit for these end of day videos. Yes, and I got a number of questions from people. So yeah, I will probably do 1 or 2 videos depending on the week that will be strictly for the public. But what I would like to concentrate on more, right? And I've been doing this for for these videos for a number of years, and I have to kind of change things up from every now and then and make it a little bit more exciting for me so that I can continue to do that. So yes, if you would like to receive videos for the rest of the week, just go to substack.com. It's the link right there is ttgtrading.substack.com. I'm not going to charge a lot for this. What I charge right now for Substack is $40 a month. It's nothing. And it's really not like, I would think that many of you who are watching this already subscribe to a number of different services, right? That's all part of the game. Like, I think it's very important to do that and try different services and see which ones help you in what you're doing and see which ones add value. But it's important to do that. Like, I already pay a lot of money in terms of the services that I subscribe to. Bloomberg, right? That I show from time to time. That's $2,700 a month. So, and plus I subscribe to a number of other services too. So, it's just part of like doing business. And I get that some people always want free stuff, right? I get, like, that's fine. Free stuff is good, but you're going to get much better quality of things when you have people who are charging something for them too, because they're devoting time and energy to them, right? So so that's $40 a month, and if you want to be a member of Tribeca Trade Group, I don't do any price gouging for that either. That's $130 or $129, whatever it is, a month, right? It's nothing. It's peanuts. My plan is to why I want to be doing the rest of those rest of the videos for members for those other days of the week is because I want to concentrate on positions and go through more charts in more detail, right? And go over my open positions, right? And I can't really do that in the public videos so much because, right, then it's not fair to paying members. So in any event, that's the route that I'm going. And again, I don't think anybody should be upset over that because I'm not charging much. So, and if you can't afford, like, I'm sorry to be like nasty about it, or mean, but if you can't afford $40 a month, then you probably shouldn't be trading in the first place. Sorry. All right. So let's go to the price action. And I'm sorry if that bothers you or offends you. Let's talk a little bit about the technicals, and then we'll talk about what did well today and what did well for the week. We'll talk a little bit about my watch list, but first, I always like to talk about the technicals. TLT. So I'm going to talk about bonds in a minute too, as I almost go to bonds first. But it's just the S&P. I mean, we talked about that. There's really we really shouldn't be spending that much time here until we have a change in trend, right? The uptrend, you may not like it, and maybe the momentum is starting to fade. You could kind of see this in the RSI. Could we break the 20-day moving average and come in and maybe test the top of value? Sure. And that's really not that far away. It's 1.25% away. So I think that would be like, sometimes if you're positioned the right way, and if also you're not finding a lot of setups to that the market has kind of gotten a little bit exhausted, sometimes the best thing that can be is like a swoosh to the downside, because it kind of just resets everything. Now, of course, right? A swoosh to the downside, we want to see, buyers come back in, right? And that's kind of what we've been seeing, over the past couple months is while this has been going on, and when price does get down to like the 20-day moving average in here, and which has been above the value area for the last couple months, what we're finding is that buyers are coming in here, right? So it means to me that these small little dips that are getting bought just means that a lot of people have been left out of the rally at this. So, and they're trying to kind of get in it and maybe get caught up, who have been left out of the rally. That's kind of my take on what's going on. Now, that's the S&P, right? And before we go to the Qs and IWM, I think, what was a big factor at play this week was what bonds did, right? And, we're sitting here, and I think it looks even more notable when we look at the weekly candle for TLT, now that Friday is complete. But we did come in, and that's pretty much a bearish engulfing candle. Now, did we break anything? No, we didn't break the value area for the year. That's really where I'm concerned. That level's 92.36. And yeah, I mean, my prediction is and I can't tell you if we're going to break that value area, but if we do break that value area and we start heading lower, meaning interest rates are going higher on the long end of the treasury curve, I would think that volatility will pick up in equities, right? We certainly have seen that before. We also know that, IWM and the small caps have been more sensitive to interest rate moves. So again, we're talking about the long end of the curve. Don't forget on Wednesday, right? Powell will be talking about the short end of the curve, right? Interest rates, right? And whether or not, what their view is, and if anything has changed considering these last couple inflation reports have been hot. So will he still be talking about interest rate cuts in the next couple months? I highly doubt it, but I can't speak for him, right? I don't think that there's any way that they can be cutting interest rates anytime soon, but that's my personal opinion, as high as inflation has been running. But maybe he sees something else. Maybe he's concerned that the economy is starting to slow down. So that's Wednesday. And again, that's the overnight short-term interest rates. That's not TLT. Right. So just so that there's no confusion, because I always see people get confused on these types of things. The dollar had an up move this week, right? That also is kind of more of that, risk off type feel for the market. Has anything really changed here in the trend? No, and we are in an uptrend with the dollar. We've just kind of came into we've had a rest for the last couple weeks. This is again where the TLT had a bearish engulfing. This did not. This was basically just an inside candle. So I don't think that there's much to really get that concerned about yet. Unless if we start to take out those highs from earlier in February, yes, I would be more concerned, right? And if TLT starts to break down, yes, I would be concerned, absolutely. But for now, I think that we know that March is not the easiest month to trade, and we know that we've got a lot of rotation right now on the tape, which brings us to the Qs, right? Well, the Qs do have a bearish 80% rule, right? And I'm just going to zoom in here so that you can see this a little bit closer, right? And that means that we could see a move down about 1.4%. To the bottom of the value area. And that could also be, I like how this 50-day moving average lines up with the bottom of value, but overall, that's really not that big of a deal considering when you look at what did the Qs do today? The Qs were down 1.2%. So it's almost like a repeat of today. So again, okay, not great, but I think that will also kind of just reset things a little bit, right? And we started to see a lot of, growth names kind of really get hit, and it's tough to trade. Once we start to kind of bend down like this and start to move lower and break like the 20-day moving average, move into the value area, you're going to just find that there's a lot of things that look good for a second, and then another second later, like their breakout move or the positive move that you were seeing reverses, right? So we're kind of back in that market for now in terms of, growth stocks, right? There are a lot of failures of up moves. So I think, being patient here, right? We talk about a lot in these, as I try to talk to members about, if you're swing trading like I am, it's about making adjustments, like reducing risk when you need to, right? Not getting, not giving back profits when the market starts to act differently, as it's been for this area of the market. Again, this is very different looking than what I just showed you with the S&P. Now, IWM, right, has been just all over the place. I've had various different ways to quantify or what I think IWM has been over the last few months. I've called it very whippy in a sideways range, right? I mean, there just hasn't been that much momentum, other than, remember when why we did see the momentum, or where we did see the momentum, right? That was back in November and December. Why did this big up move happen? Or what was partially the reason for the up move, right? It was because the Fed started to change their tune, right? And once they backpedaled on that, small caps really haven't done anything, right? So they need some help, right? Some other areas of the market don't need that help from the Fed, I would argue. Small caps do, right? And so do other areas like solar, biotech, right? And I'm trying to think of, there's clean energy stocks as well, right? They need that help from, they do not do well in a higher interest rate environment, right? And that's, with that is where the Fed comes into play. So at some point, some year, that's a slip. So if some point this year, if Powell does come around and get dovish again, right, you'll probably see some outperformance of the small caps, right? I don't think this is rocket science. For now, do the small caps look outrageously bad? No, they're still still above the value area, and that's even better than what Qs look like. But they're leaning down again there too. All right. What about the market internals, right? So this is something that I do include in the Substack, right? And you're going to see when I talk about 4-week new highs versus new lows, right? This is significant. I labeled this, and we started to see this beginning yesterday, but this was even more today, significant deterioration. Now, I took this snapshot midday, so it may have changed a little bit. I don't know why I have an F in there. I don't know. That's odd. But 46 new highs and 42 new lows. So that's not what we've been seeing the last couple of weeks. The last couple of weeks, we've seen things like it's been like 80 new highs and 6 new lows, right? The new 4-week lows have been in the single digits, right? So this is the significant deterioration. Is this the end of the world? Is this like disaster that's coming? No, I don't think that either, because I'll show you what this has looked like when we go to, so again, you could see it's pretty even. And what was it by the end of the day? 58, 57. But if you look at the chart of this, right? So here's where, and this isn't updated for today. There's a day lag on this, right? So this is what we saw yesterday. So you're going to see a little bit of a bigger move. But notice what happened in January, right? January, we saw new lows really tick higher. We didn't really see that much we did see some pullback, but we didn't see a big pullback. So you kind of have to keep that with a grain of salt. Now, this is just the S&P, right? If you don't want to see something worse, then don't look at NASDAQ, because NASDAQ had 145 new highs today and 485 new lows today. Now, and what's the percentage of that? That's 16%. So again, this won't be updated for today, but you could see that the new lows even yesterday picked up again. Now, was this like an epic disaster back in January? No, but there was a bit of a correction. So you could if this sustains, I would guess that there might be some more downside action, and I highlighted the level for you to watch in the Qs, right, and a little bit of what to watch in the S&P as well. All right, so again, concern, deterioration, right? Make adjustments, right? Even you can have a short position on too, right? If you want to short the Qs down to the bottom of value, that's not a bad play in my opinion, okay? And it kind of helps too if you're still holding like a long, I'm going to talk about Microsoft in a second, right? You could be long Microsoft if you like, as long as you have like a short Qs position on, right? That's the way that I would kind of think about that. All right, so let's talk about the day's performers really quick. What did well today, right? A lot more value groups again. Bank, look at the banks. We're fine today, right? They were actually one of your best performers. So it's not all bad out there. It's just there's a lot of changing, and things like Adobe, J-Bill reinforced what we've been seeing lately is weakness in tech, weakness in software, right? These are not groups, in my opinion, that I want to be involved in right now. Let them come in a little bit more. Same thing with the cyber stocks too. And there's nothing, and again, like I know I'm repeating myself a little bit, but there's nothing wrong with these groups taking a bit of a breather, right? Let them reset, right? Here's what cyber looks like on the daily chart, right? Well, this is that the ETF. I wanted to bring up the ETF, right? Yeah, it's starting like it broke its 50-day moving average today. It hasn't done that in months. So recognize because I know some people are slow to kind of grasp some of these concepts, but let's see buyers come back in. Right now, there's distribution going on, right? And again, when I talk about buyers, it's not me or you, like the retail investor. It's the big institutions. The big institutions are cutting their positions for now, right? You have to kind of wait until they come back in, right? And again, this happens quite often, right? And here's IGV, right? That actually fully broke the 50-day moving average. That is a big no-no for something that's been in an uptrend for a while. Once you break, some people like the 20-day moving average, but this is the first time that this has been below the 50-day moving average since last November, right? When we had some bad price action for a couple months. All right. So yeah, this is a change in tone, right? And that's why we use the moving averages, right? And that's why we use indicators, right? They're not predictive, right? They give their stop sign, like, hey, something's changing, right? Reduce your, in my opinion, right? I'm not telling anybody what to do. I'm not giving you advice, recommendations, but for me, it means take the risk off in those areas. Something different is changing, right? And this also had other signs here, right? When we made a lower high here too, right? But again, if you didn't catch those signs, like in the last couple weeks, right, then you didn't lose that. I mean, this isn't that much of a difference between the highs and its 50-day moving average. So that's what we have here. And so that's kind of the negative. And because this market does have negatives right now, the positives are what's going on in things like copper, right, which we've talked a lot about over the last 2 weeks. Right, I was one of I'm sorry to say, but I like when I'm the first one in some of these things. I tweeted out a copper chart like literally 2 weeks ago, talking about how this was starting to get interesting. Now it's amazing how fast these moves happen. We've already gone in and taken out that VPOC up there. So would I go long copper here? No, I wouldn't. And I got out of I had a small SCCO trade on, and I got out of that today. Why? Because it's a bit extended, right? That's a big move. They're not into AI, right? But yeah, so I took the money and I put it in my pocket today. Look at the volume, by the way. So let this back and fill, and it's nice, if you miss this move in copper and copper stocks, now you know what to watch, right? And that's that level, and I'll put this on the weekly chart too, so it'll be a little bit clearer. But we went right into the top of value. Right. So that's a big level of resistance, right? And maybe a little bit of backing and filling might be in order in here after a huge week in copper. Now, crude. Let's talk a little bit about this, because energy was has been a big performer, right, over the last couple weeks, right? Crude is also like right around that top of value. And I think that's going to be interesting to see whether this can maintain, right? Or kind of go sideways a little bit, but there's definitely been strength within this group. Other areas, home builders, I want to talk about them really quick, right? Lennar came back today, right? So I get questions all the time about, and this was a great question today from one of the TTG members about, hey, interest rates went higher this week. How come home builders are hanging in there? Well, because as we know, and there's more than one factor at play, right? There's a situation with housing right now where there's not a lot of supply still, right? And there's still adequate demand for housing. So that's a situation. I know that retail, as long as I've been helping retail traders, right? I know retail traders love to have a rule. They love to say, hey, when X happens, then Y should happen, right? But relationships don't always work exactly like that. If you've been trading for a while, you know that like interest rates can affect like, so it's like the way I described it earlier is like pieces of a puzzle, right? It's not just one piece of a puzzle, meaning like, oh, interest rates go higher, housing stocks go down, right? That's a part of the puzzle, right? But it's also about demand and it's about supply in the housing market too, right? And also like what housing stocks. And you can see, for example, Toll Brothers, which caters to luxury buyers. Some of them are coming in with all cash deals. They don't care, right? They don't have an issue with interest rates. Maybe they do because they won't be earning the 5% that they're getting in T-bills, but that's a whole nother story. So that's another group that I found of interest. A couple names that I thought also were interesting, and I've owned this name for a while in the TTG trend portfolio. This is STLD, Steel Dynamics, right? This had earnings, nice volume and a nice break higher, right? And this could be a group that continues to go because these are not really expensive names. And even though Nucor had a turnaround, now I still favor Steel Dynamics, but Nucor had ended up having a real nice move. So not everything is going down and not everything is certainly going up right now. So you have to be somewhat, I think, concerned. And you have to, think about relative what's acting well right now and what's acting pretty poorly, right? Another one that I'm watching, and this is in the TTG trend portfolio as well. It didn't act well yesterday, which I didn't particularly like. So I didn't do anything with this name yet, but this is Reliance Steel and Aluminum. So this is another one. And but I would wait until this gets back above those short-term moving averages. It has certainly spent its own like sweet time with going sideways here. A few other names to kind of go over this time in the material space, right? We talked about this. It's another one I've been talking about for weeks, right? It's not the fastest mover in the world, but this is a nice breakout in material names. So I do like names, and I did get long some CE today, right? This is a name I was looking at for the last couple of days. Finally kind of broke this little range and it moved higher. I'm just looking for a move basically to that VPOC up there. I also talked about some of the agriculture names, right? This NTR close to moving higher, not yet. This is a little bit more difficult for me because the name's in a downtrend, and so are most of the agriculture names. But they could see a little bit of reversion to the mean, right? Here's how our watch list performed for this week, right? So again, I try to gear this. You could see how many names in here that basically I wanted to watch and keep tabs on things like ServiceNow and Uber, just to see what they would do. But I definitely was favoring. Got a lot of energy in here, a lot of materials, and things of that nature. So I'm going to before I'm going to finish the video for the week. Here were your best performers. Take a look on this top line. Right. So if you couple this with last week's performance for the Qs, I think the Qs are down a little bit more than 2% now for 2 weeks. IWM, which outperformed last week, gave back where it was the worst. So it outperformed a week ago. This week it underperformed, down 2.1%. So again, that's just how small caps have been behaving. Value outperformed a little bit, right? I even looked at value versus growth. There's not a big difference in here. Right. I actually don't have the chart up anymore, but the change isn't that the difference has not been even that significant. But value has been outperforming a little bit, right? And you had OIH up 4.5%, XOP. There's a material, and then a drop off after those 3 energy ETFs. By the way, Chinese internet names, even though they didn't perform well the other day, still up 5% for the week, right? There's veggie, there's agriculture in there, materials, gold miners, staples, right? So this is where we're concentrating on for now, and then we'll watch for the dip in a couple other areas. Clean energy, right? And by the way, you know, so I'm going to cover the Microsoft chart in just a second, but yeah, so you had semis down 3% this week, right? Perfectly fine. I think give them a break. Super, super hot. Let them cool off, shake out that hot money in it, and then they might set up again. Right. And look at the other areas here. And you know, very interesting in terms of emerging markets, right? Emerging markets usually do fairly well when copper goes up. But you have a lot of different countries, obviously, in the EM ETF. And if you look at the difference, like India was down 5% this week, right? A little bit overcrowded, probably on the hedge fund side. They also they export rather than import, right? Did I say that right? Or no, they import commodities rather than export. So that could be costing them a little bit. And then if you look to see what happened on the upside, you have emerging markets like Peru, Chile, right? And you know, a few other areas like Mexico did well this week, right? I mean, these things really strong. Here's EPU, right, which is probably one of the strongest countries right now. I mean, that's a really nice breakout that you're seeing in Peru. All right, and then I mentioned I would go over the Microsoft chart, right? So, you know, Microsoft had this breakout earlier in the week, but you know, nice break of the value area and, you know, extended to new highs, right? And then this check back to the top of value. So I actually went long a little bit of this. I didn't want to go short the Qs into the new week, but that's a trade that I could be looking as like a pair trade for next week, you know, exploiting that bearish 80% rule that we talked about. And for now, as long as Microsoft is up above 412, then you know, I think it's you know, the breakout is in play unless it closes below 412. Guys, have a great weekend. See you next week.